We met with a client not too long ago. Let's call her Kim to maintain her anonymity. Kim is a pediatrician and a single mom. And like with all our clients, we went through her story and financial situation at our first meeting. However, when we began to introduce the concept of child millionaire and the opportunities of a par whole life policy, given her 2 kids and the expenses coming down the road, she emphatically said no. No whole life insurance. After waiting a second before replying, "Okay, can we ask why?" She chuckled a little and then said, "I don't actually know why. My dad always said no whole life ever, only buy term insurance. And we have a term life policy already." Kim is not alone, and this reaction is all too common in our business. In fact, many individuals feel the same as Kim's dad. But as we explained in the previous videos, individuals and even some financial advisors don't understand how to use a par whole life policy. The reason is they incorrectly look at whole life from an investment standpoint. And the naysayers will state the following. Whole life means higher premiums. You pay for cash value and death benefit, but your family will only get the death benefit, and the insurance carrier keeps the cash upon your death. It's nothing more than a glorified savings account. You can make higher returns on other investments. So, for perspective, let's dissect their claims. You will have higher premiums with par whole life than term insurance. But term premiums only pay for a death benefit. The insured would have to renew the policy for another quote-unquote term for the death benefit to continue. That means you lose all the money you put in if you don't pass within that policy period. It's just like every other insurance policy. You pay to protect in case something terrible happens, and it's a sunk cost. It is designed to expire before you do, and that is why it is inexpensive. You are renting death insurance for a term. To counteract and refute the other points made against whole life, here are the following truths. Your premiums are guaranteed not to increase for life. So if you are young and healthy when you start the policy, your payments are low and will remain so no matter if your health changes. Depending on the terms, you will have a bank of money available to borrow against within the first few years of the policy. Tax-free. Even if you borrow money, your cash value doesn't decline, and it continues to grow every day in value, guaranteed by contract. All growth is either tax-advantaged or tax-exempt if accessed properly. It is the only financial vehicle that can be left to your heirs tax-free. To borrow cash, you never have to fill out an application. It's not like loaning money from Bank of America or TD Bank. There is a guaranteed death benefit, so even if you borrow the cash value and don't pay it back, your heirs will get the death benefit, minus the loan amount, plus simple interest. Whole life consistently, over time, outperforms the more traditional savings tools. Your policy's cash value is guaranteed to match the death benefit by age 121 in the US and 100 in Canada. The higher your death benefit, the more cash value you can leverage during your lifetime. The cash you put in via premiums represents only a small amount of the money you and your heirs will receive, so you are paying pennies to get dollars. That's a lot to unpack, but it all goes back to how most individuals view a life insurance policy as either sunk cost protection for your loved ones or a warehouse of capital that just keeps growing and you can access while alive. Child Millionaire views it as an asset, a warehouse of money at your disposal. It is both life insurance and death insurance. We liken the previous thoughts to a recent interview we heard with the CEO of Ford. The discussion was around the electric Ford F-150. If you take it at face value, it's an electric truck, and it becomes unappealing to purists and prime purchasers. However, the CEO, knowing he had a sizable perception hurdle to cross, encouraged his loyal truck buyers to change their viewpoint. He went on to list the attributes of this new vehicle. It has more power than previous trucks, produces energy for a job site, acts as an office, and can even be a generator for your home in case of a power outage. Basically, the CEO called on his consumers to see the other possibilities behind this tool. And that is what we are telling our clients to do with Par Whole Life Insurance. It goes without saying that we should all have life insurance to cover the costs associated with our passing, and maybe to leave something behind for our loved ones. No one disputes this. However, the Child Millionaire book and mindset aren't solely about preparing for one's inevitable passing. They are, however, about building generational wealth. They are about you and the next generation having a cash reserve or warehouse of capital to invest, fund, and carry forward. Par Whole Life is just the vehicle we use to create the domino effect of familial, multi-generational wealth. As we've stated before, we researched how the wealthiest families in the world handle their money. They all use Par Whole Life policies to be their own banker, and they have successfully handed down their practices from generation to generation. It's how they keep the familial bank growing and lucrative. And you can do it too. So first and foremost, this must be your mindset as we move forward. You are not just buying insurance. You are not investing in anything. Instead, you are building cash reserves for you, your child, or your grandchild to safeguard, fund, and invest.